This is FinTech Insider News. This week, Stripe and EBANX team up to roll out Pix for business clients in Brazil. Brex bags a payment license, allowing it to serve the European Union. And we hear all about Marqeta's latest acquisition. We'll be discussing all of this and more on today's show.
Get lost in the acoustic brilliance of 3D audio that surrounds you. Feel the embrace of the massage seats that adapt to your every move. Experience the warmth of a vehicle that welcomes you as you approach. We could tell you what makes a Lincoln SUV so extraordinary, but don't take our word for it. Take it on a test drive at the Lincoln Summer Invitation with exclusive offers on now, only at your local Lincoln retailer.
The Roses were living the dream.
To you, my darling.
No, to you.
Until it all came crashing down.
He got fired.
Fired?
On August 29th, stop.
You stop!
And see The Roses. Rated R. In theaters everywhere, August 29th.
Hello and welcome to episode 989 of FinTech Insider, brought to you by 11FS, the 5-time consultancy of the year that works with banks, investment firms, digital banks and fintechs to build the next generation of financial services. I'm Benjamin Ensor, Director of Research and Strategy here at 11FS. Now, it might be the summer holidays for some in the Northern Hemisphere, but there's no slowing down in the world of fintech, with acquisitions, launches and big moves happening all around the world. We'll dive into some of those stories shortly, but first, I'm joined by 3 fintech experts who've stuck around to share their insights. So let's meet our panel. First of all, we have a very welcome FinTech Insider debut for Aaron Carpenter, Chief Executive at TransActPay. Welcome to the show, Aaron. We're going to be hearing a little bit more about TransActPay's exciting news shortly, but could you tell us a little bit more about the company and what it does?
Yeah, absolutely. Firstly, thanks for having me. Very nice to be here. It's a very hot, sunny, humid day here in Gibraltar. So, the opening resonates. So for those of the listeners who don't know, TransActPay is or has been historically what we would refer to as a BIN sponsor. We have electronic money licenses in both Malta and Gibraltar, and as such, service the UK and the entirety of the European Union and European Economic Area. Historically, we've really provided access to regulated markets and payment schemes for unregulated fintechs that really want to launch a payment product. That could be a neobank, it could be a buy now, pay later provider. There's a myriad of different use cases that made sense for. But what we do today, almost as often as supporting those unregulated fintechs, is we provide payment services to non-payment companies or other financial institutions that really don't want to take on the card aspect of a service. So we are maybe complementary to the core service offering that those businesses may have.
Fantastic. Well, welcome. And we have a FinTech Insider return for Bruno Diniz, Managing Partner at Spiralem. Welcome back to the show, Bruno. It's always a pleasure to have you on. Can you remind our listeners who've maybe not heard of a podcast with you on before a little bit about you and what you do?
Fantastic, man. I'm glad to be back here and to discuss fintech. First of all, I have a company called Spiralem. We focus on financial innovation and consulting with regulators, governmental bodies from Brazil and abroad, and also corporations, helping them innovate. Besides that, I also have a role as a professor at the University of São Paulo, teaching at the MBA courses there, basically financial innovation. And recently, I've been elected in the first quarter of 25 as also an independent advisor at Open Finance Brazil. So I joined the board there this year. And last but not least, I'm also a writer. And this September, I have some news, which is a collaboration with my dear friend, Brett King, and a host of other writers for a new edition of Brex tomorrow. That's going to be released this September. So I'm glad to be here.
Wow, congratulations. And I'm impressed that you have time to be here. So thank you for
Always
joining
a pleasure.
us.
Yeah.
And I'm also delighted to welcome back Theodora Lau, founder of Unconventional Measures. Like Bruno, you're quite well known, but Theodora, perhaps you can remind listeners who've not come across you before a little bit about who you are and what you do.
Thank you so much for having me back, guys. So yes, what do? I talk, I write, and I ask uncomfortable questions. That's typically what I tell people I do. But most recently, I just released my third and latest book. It's called Banking on Artificial Intelligence. So as you would probably can relate, Bruno, it's just be running around the world and telling people about what technology is about and why it applies to our banking world.
Wonderful. Well, thank you all so much for joining me. So let's crack on with the news. So our first story is that Stripe is giving businesses access to Pix via its partnership with EBANX. So Stripe has deepened its 4-year partnership with payment services provider EBANX to bring Pix, which is Brazil's instant payment method from the central bank, to businesses using Stripe globally. So Stripe users can now process Pix payments from Brazilian customers in Brazilian reais while receiving settlement in their own local currency. In Brazil, roughly 3/4 of the population uses Pix, making it a widely trusted and expected payment option. Enabling Pix through Stripe and EBANX gives global merchants better engagement with Brazilian customers by offering payment methods that they already use and trust. To tell us more about the partnership, we have Daniel Kornitzer, Vice President of Global Partnerships at EBANX.
EBANX and Stripe have been building an exciting partnership together for 4 years, and now we're taking the next step. Any merchant operating on Stripe can now offer Pix in Brazil through EBANX, collecting in Brazilian reais and settling in their home currency. Brazil's favorite way to pay is now plug and play. Why does this matter? Pix is mainstream in the biggest Latin American economy. Around 93% of Brazilian adults use it, and by the end of 2025, it's projected to surpass cards in online purchases. Crucially, Pix doesn't replace cards, it complements them and expands the market. About 60 million Brazilians don't have a credit card, and when merchants add Pix, we've seen on average a 16% uplift in revenue and 25% more customers within 6 months. Together, Stripe and EBANX let global brands meet Brazilian consumers with the payment method they prefer the most. This partnership also highlights that in markets like Brazil, where things move fast and local knowledge is key, deep regional expertise plays a critical role, connecting the dots to help global merchants operate locally with scale, trust, and performance.
Bruno, let's come to you first on this. What potential does enabling Pix through Stripe have for international merchants? How big a deal is this? What do you think?
Well, fantastic, Dan. And I think this case, it's just a sample of other cases that are also happening in this tentative of bringing Pix to our more global players, and also making it available for Brazilians abroad as well. So recently, we have this case of EBANX with Stripe, which is massive because Stripe is a very global player on digital payments. But also there was another recent case of Pag Brazil, which is a Brazilian provider that integrated with Verifone in the US, so that the POS, the Verifone POSs could also take Pix payments, which is great for, like, if you're thinking in Florida, for example, there we have a very high concentration of Brazilians, and also New York. But for this case specifically, I think that when you consider the penetration of Pix in Brazil, which is massive, it's like more than 80% of penetration in the adult population. So it's very relevant for merchants worldwide to have the opportunity to take payments in a local, very well accepted payment method. And I think that also stands true to when you think about other jurisdictions as well. For example, in the case of India, I think for many players, also international players, trying to integrate to UPI and have the possibility to be plugged into the local infrastructures. As well, we also saw that in Asian players, like the possibility of people from China paying in Europe through Alipay, through partnerships also made for this sense. And I think that the consumer got to pay with the payment method that he wants the most. And if this possibility is given to a global provider like Stripe, I think it's great.
Thank you. Aaron, I'd love to bring you in because EBANX's chief executive, João Del Valle, sort of called the partnership a no-brainer. And from the outside, you look at sort of partnerships like this and you think, well, why wouldn't they partner? Of course. But from the inside, actually, presumably it's not that easy just to sort of partner, with lots and lots of other payment providers all around the world. And there's an awful lot of complex technical infrastructure to think through. There's commercial agreements and so on. How hard is it to just partner with other payments companies around the world to make things easier for your customers?
Great question. The answer is not at all. I think if we're honest with ourselves, and putting aside the competitive issues that can come in those various payment rails and methods that do come into the equation, but I think that what we're seeing certainly is that there's almost two distinct camps. There's the camp of, companies that are choosing to become genuine payment companies or banking alternatives themselves that are, looking to establish many, many different relationships and service lots of different verticals versus maybe the embedded finance play where actually what people really want is a one-stop shop. And they want somebody that can sit in the middle and really connect all of those dots for them. So I think what Stripe are doing here makes perfect sense to me. And I think as Bruno says, I'd be very surprised if Pix is the last example of this that we see over the coming months.
Yeah, definitely. Theodora, what's your view on this? I know you're a big fan of financial inclusion, and obviously including a payment method that's used by a huge swathe of people in a very large country. That's a big step in the right direction.
Definitely is a big step in the right direction. I'm a huge fan of what Pix has done, precisely because of how they're able to bring 50 million people, more than 50 million people who didn't used to have a banking service to be able to be part of the ecosystem. And I think what's brilliant about it, along with what Bruno was talking about, between Pix, between UPI, all of these new, quote-unquote, new systems, they are enabled with financial inclusion in the very beginning, first step of the design, right? Is not an afterthought. Is not a system that's been stood up for mostly how do we maximize profit? How do we make money out of it? The true design, the first step of UPI, of Pix, of M-Pesa. A lot of these systems, they're thinking, how do we bring people in using mobile technology? And that's what's beautiful about it. And the one point we talked about cross-border payments and how we can enable Brazilians to pay with the system that they're used to with the local payments is very similar to what Alipay Plus has done a few years ago, where they enable both sides of the coin, right? The merchant side of the coin, enabling them to have access to people who are there and who travel around, as well as travelers, people who are traveling from Malaysia. They're able to go pay in a foreign country with their local wallets. So that's brilliant.
I also think the working capital impact for small businesses is huge here, isn't it? The fact that merchants are able to, receive their revenue so much more readily and so much more timely, and then maybe with some other methods is also a huge enabler of, not just individuals but businesses coming into that ecosystem. So,
Bruno, who are the sort of biggest winners here? I mean, is it the merchants? Is it the sort of SMEs and so on? Is it Stripe? Is it Brazilians who can now maybe buy slightly wider range of things more easily? Is it merchants trying to sell into Brazil? I mean, does everyone win? I realize it's not necessarily one winner, right?
Sure, I think, yeah, the whole ecosystem wins with that. I think that's the premise. But I think in terms of reach of international players that want to do business with Brazil, I think that's great because it's open up an opportunity to accept like a largely accepted payment system, which is Pix. So that's great for business in one hand, so business can tap into the Brazilian market, and also for access, so that the Brazilian can also access other products with better deals, better offerings all over the world for jurisdictions where Stripe is available, which is basically the whole world. So I think that's a win-win situation here for sure.
So, yeah, particularly sort of Brazilians without a credit card. So presumably Brazilians with credit cards could kind of already transact somewhat. But
exactly.
Yeah. Aaron, one of the things that struck me in this, and you may not know the answer to this, was this point that merchants who accept Pix can get settlement in their own local currency, which means somebody there is doing not only currency conversion, but probably taking a little bit of currency risk, maybe at Stripe, etc. I was surprised by that. I mean, it sounds great. How complicated is that for Stripe and Co. to do?
Truthfully, I was reading news of interest because that is, when we think where some of the margins involved and the parties in our supply chain, that affects fluctuation could be material. So I guess I certainly can't answer the question, but I would comment that I'm very interested in keeping an eye on this and seeing how it unfolds, because as we mentioned earlier, if other providers are going to try to compete with similar products and services, they're going to have to take the same risk, one would assume. So it's going to be interesting to see how this pans out.
Okay, so it's not just me. So there's going to be some clever tech and some clever risk management and possibly a sort of big bank's balance sheet or something else in the background there, because I mean the trade flows might not be huge, but there's a big element of sort of risk in there, isn't there? Yeah. Okay, interesting. Bruno, how fast is Pix growing? I mean, from outside Brazil, it just seems to be just sort of taking over the economy. But maybe we've got that wrong. How big a deal is Pix in Brazil?
Well, I think that Pix is one of the most important financial innovation pieces that we have in terms of public infrastructure in Brazil. So if you consider that, as you mentioned, we have it also helped in inclusion. So we have a big number of players that didn't have access to a credit instrument like credit cards, and that they could use their wallets and use Pix. Pix helped in the competition as well, because prior to that, we used to have other even mechanisms of transferring that sometimes there is one called TED in Brazil that would charge up to like a $3 to $5 as a fee for transferring money. So sometimes you have
just between accounts.
Wow. Between accounts. So if you have like $3 to transfer, so it's not viable, and you got to consider the low income population in the country as well. So that was very important. And besides that, we have also a very extensive roadmap for Pix. So when you integrate Pix with Open Finance, then you came out with variable recurring payments, and a set of new functionalities, even buy now, pay later embedded into Pix is something that's going to be released soon. Each bank does it in their own way, but now we're going to standardize. The central bank is going to standardize that. So it's massive. I think that it's a public infrastructure that is already proven to include people, also to level the playing field in terms of competition, and it's just great. So it's a big deal, and that's why it's so important to hear news like this, that this is going to be integrated with other global payment providers.
Brazil is really setting an example for other countries to follow. I mean, Theodora, you mentioned India, and so I think both of you mentioned, and there's many other countries as well. But Brazil is really setting an example for other firms to follow.
Yeah. I mean, if you're thinking about what almost 160 million people that are registered to use Pix, that's huge.
It's a big story. I think we're going to be hearing more more about Pix on many future podcasts. Okay, well, let's move on to our next story. Even though that was a super exciting one. So our next story is that the American cash management and credit card provider Brex has secured payments licenses to serve the European Union. So these licenses authorize Brex to operate across all 30 European Union member states, offering European businesses a variety of financial tools, including corporate cards, expense management, and treasury services, without needing third-party intermediaries. Until now, Brex's platform was only available to companies based or headquartered in the United States. Brex already supports around 1,500 customers operating in the EU, and nearly half of its clients have multi-country operations. Aaron, maybe I'll come to you first as someone who's in possession of European Union licenses. What does Brex get by getting a sort of European Union sort of payment institution license? They've done that via the Netherlands. What's the advantage of doing that? I mean, it just basically just opens up the whole EU to them, correct?
It does. I mean, subject to passporting, which I'm sure they're very much on top of. But it's an interesting question to ask me, actually, because on one side, I'd like to be, singing the praises of bin sponsors to help you enter the European market. But if I'm a little bit more objective about it, which perhaps I should be, look, it's an incredibly sensible move, isn't it? The internationalization of a product from region to region is tricky. We all know. I find there's often a belief that moving from North America into Europe is easy. Which isn't the case. I think the nuances between member states, for example, in Europe are greater than people necessarily realize. So by bringing that in-house, that expertise in-house, that regulatory coverage in-house, I think it's, if they've got the means to do that, clearly, is a very smart move. I think it means that they don't have the supply chain risk that they might otherwise have. They're able to ensure that the licensed entity is totally focused on the product that they want to support, or products that they want to support. So for me, it makes perfect sense what they've done from their position. Not everybody's in the position to do that, of course, but I think given this scale, it makes sense. And also, the Netherlands is and quite rightly, not the easiest jurisdiction to obtain a license in, which I think, adds even greater value perhaps to the project.
I'm not sure there is a jurisdiction that wants to be known as the easiest place
No.
to get a license.
Probably not.
There are countries around the world that are quite easy to get a passport from, but I think, you don't necessarily want to be a country where it's
but that's
easy
a different podcast, isn't
it? Regulated. Bruno, what do you think of companies like Brex? I mean, there's a number of startups like Brex that seem to be doing impressively well at providing services to companies, to smaller companies, medium-sized companies, and just seem to be able to just move faster than the banks, to innovate faster than the banks. How impressive do you think that is? Do you think banks in Europe should be worried that a firm like Brex is coming with a successful strategy from the States and bringing that into European Union countries?
Great. And I think that the same logic that Brex applied in the US, which is, trying to face the complexities of the traditional banking for SMBs initially. Now they expanded the proposal to more larger companies as well. But I think that the problem stays a little bit the same when you think about US, like incumbent providers and European incumbent providers. So that there's still a major opportunity to upgrade and to offer better services for that type of segment. I think that's good. In terms of competition, it also forces some of the incumbents to raise their bar. But for a while, we haven't seen that happening fast enough as those fintechs are expanding. So tricky case here, but it's a logical step for them to step into the EU market after the success they had in the US, and I think they're going to do great on that and change the environment in terms of competition.
Theodora, what do you think on this point of sort of American fintechs coming to Europe? I mean, obviously, Europeans have all grown up with American brands and so on. There's huge numbers of American companies operating in Europe, but does that make it easy for an American fintech to come and do business across Europe? What's your view on sort of brands trying to expand across international borders?
That is a loaded question, Benjamin. I know you're throwing it at me. Oh my God. It depends if we're talking after dark with a glass of whiskey or we are on the mic. Since it's the latter, I think if we take a step back and look at all the brands that's quote unquote American that's been operating abroad, the quickest one would be the PayPals of the world. The back even before it will be the Visa and the MasterCards of the world. The short answer is, as long as there is a place and a need that you can fill the market, yes, it can work. I think the newer nuances and challenges that we might have would be the perception of American brands that's operating abroad that may or may not have anything to do with whether or not you're a fintech and the need, more so to do with the sentiment of companies who want to have a different choice of products from a different country. That will be one. I think the question around whether or not brands from here will be able to adapt to the regulatory environment, to the needs, and also from a perception of data privacy and what exactly do you need and how can we adjust product offerings to what you need rather than just here, this is what we have done in North America and ticket, right? So it's about the attitude. It's about the how can we be there and listen to you and offer you what you need versus the other side?
It's a really thoughtful point, isn't it? Because we're in a sort of state of global politics where companies perhaps don't like to fly the flag quite so much, and you sort of want to sort of submerge nationality a little bit because of the sort of tensions around the world that certain nationalities are getting sort of associated with certain brands of politics or whatever.
I got an earful of that in the last 2 months, trust me.
Where have you been? Have you just been hearing that all around the world, or have you been traveling in particular places where you sort of heard that?
I've been in Asia and Europe, let's put it this way. And I've seen brands that actively try to move away from certain products that they have. So hence my reply. But I think at the end of the day, as long as it's offering the values, not just the commercial value, but the value alignment with people that they need, I think that's the most important thing.
Aaron, I'm going to throw another tricky question at you. So a few years ago, if you'd got a European Union license, you could have operated across, obviously, the whole of the European Union, including the United Kingdom, and now you no longer can. And I think, as I understand it, Brex doesn't yet have a UK license. Obviously, that kind of makes it harder to expand to sort of most of Europe, or expand into the UK. Are you seeing any signs of sort of significant regulatory divergence between Europe and the UK from a sort of payment standpoint that's actually making it challenging? I mean, is it just a question of, okay, we have to get the correct licenses, but actually there isn't much divergence? Or are you starting to see some divergence that's adding some complexity?
It's just interesting, isn't it? Because if we take a look at the source legislation, it's all the UK legislation is still pretty much aligned with the European regulations from several years ago. But the application of that legislation, I mean, we are starting to see the green shoots of some divergence there. We're in an interesting position here because we are licensed from Gibraltar and Malta, so we do both. So every day we have to we have to balance how do we approach this, because most of our customers require issuance in both jurisdictions, and giving them two completely separate sets of rules would not be particularly helpful. I mean, things like consumer duty coming in the UK is maybe slightly different to what we see in Europe, which is quite rightly a major driver for the FCA and the GFSC at the moment. So that would be one example. But I'm also still seeing mirroring. If we think about there's commonality between DORA in Europe, for example, and operational resilience in the UK. So I think principles are still broadly aligned. Legislation is still broadly aligned, but there are definitely nuances that do require careful consideration if you're going to be active in both markets.
Yeah, thank you. It's very thoughtful. It's I think we sort of got used in Europe to having this sort of regulatory convergence that, of course, isn't common in Latin America or Asia or really anywhere else in the world. We sort of took it for granted a bit. So it's interesting as that goes away. Maybe a last quick question on Brex. Maybe for you, Bruno. I mean, Brex sort of seems to have shifted a little bit from smaller businesses to larger enterprises. It seems to me that there's a huge opportunity still with small businesses, but do you think the opportunity with larger corporations is more obvious?
Well, it tends to be. I believe that the challenge of offering to SMBs is also complex in terms of also monetization and all of that. You go to a big one is like in terms of revenue and all of that, it seems a easier route. But in terms of competition, I think it's hard to be honest in some cases. But yeah, we've noticed that, and I think it's more in the case of we've seen some other players playing into the SMB game and doing good. But the case for Brex was just like I think is a route to try to grow, be stronger on corporations. So it's an interesting pivot. And it used to be, when you think back of Brex, it's just like was the startup banks, especially in the UK, in the US. But it doesn't seem to be like the case anymore. But anyways, I think it's and especially looking at their expansion to Europe, I think that the low hanging fruit here is like really working with U.S. companies based in Europe as a start, but the acquisition of new corporations it's a long cycle to do in terms of sales and acquisition. So it's different.
That's a really good point, actually, that they will probably do best, at least initially, in serving the European subsidiaries of existing sort of American clients, where you start getting that benefit of having a global provider, and that will be a lot easier for them to win customers than trying to serve existing Spanish or French or Italian businesses or whatever. Okay. Well, on that note, we will take a quick pause here and we will be back very shortly.
This podcast is brought to you by Carvana. Got a car to sell but no time to waste? Hop on to Carvana.com to get a real offer for your car in seconds. All you have to do is enter your license plate, answer a few quick questions, and if you accept the offer, Carvana will pay you as soon as you hand the keys over. They even offer same-day pickup in many cities. Save your time, score some cash, and sell your car the convenient way to Carvana. Pickup times vary. Fees may apply.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's vanta.com/insider.
We're back, and so is After Dark. Before we dive back into the news, we've got something big to share. We're stepping out of the studio and hitting the stage once again with a special live edition of our industry-leading FinTech Insider News podcast. Join us at London's Village Underground on Wednesday the 24th of September, where we'll also be celebrating a major milestone, our 1000th podcast episode. Tickets are available now. Head to 11fs.com/afterdark to secure yours. We'll also put a link in the description below. Back to the news. Marqeta is acquiring TransActPay to bolster its card program management. Marqeta has officially acquired TransActPay to boost its card program management capabilities in Europe. The deal strengthens Marqeta's digital payments infrastructure, enabling smoother expansion for customers into European markets. TransActPay brings critical regulatory licensing, including the ability to issue e-money, prepaid and virtual cards under European and UK regulations. Marcin Glogowski, Senior Vice President Europe and UK CEO at Marqeta, stressed the urgent need for compliant, scalable payment products in today's volatile regulatory landscape. Erin, it's great to have you on the show. So fantastic news. Congratulations to you and all of your colleagues. What does the acquisition mean for you and your team at TransActPay?
Firstly, thank you. We're all incredibly excited about this. A thank you to everyone who's worked on the deal as well, because as tends to be the case, there's a lot of effort gone into making this happen. So I think what we're anticipating and what we hope for are a number of improvements to our position in the market as a result of the transaction. So if I take a look at where we've sat historically as TransActPay, as I mentioned at the top in the session, we're being sponsored, and I believe we've punched above our weight in terms of the business we've been able to do. But the reality is, as a relatively small business, we've sometimes struggled to make the transition into signing those real big corporate clients. Some of those clients we discussed earlier might be internationalizing from North America to Europe, for example. And the first big change we anticipate is by having that big corporate NASDAQ backing of Marqeta, we hope to be more successful in those deals moving forward. Secondly, the technological expertise from Marqeta to bring to the table is something that we quite frankly didn't have in-house before. So we anticipate this is going to accelerate our product development and the variety of services that we're able to provide, largely on the accounts and wallet side, which has become a real focus for us over the past 2 years. And then I think the final improvement we're hoping for is BIN sponsorship at the moment, particularly if you're working with early stage fintechs, has capital and collateral challenges that manifest in different ways. It could be pre-funds, it could be card scheme collateral, for example. And having that large-scale corporate backing, we believe will better position us to deal with those challenges. So I think that's the improvement on the advantages of the transaction from the TransActPay side and from the Marqeta side. I think we touched upon it earlier when we spoke about some of the other news. Having that internal regulatory expertise and licensing, we hope will better enable us to support the managed by services that Marqeta offer at the moment. And whilst we've done that effectively to date, I'd be surprised and disappointed if we weren't able to do that far more effectively in the months and years for to come.
Fabulous. Presumably, this is going to enable you to do sort of potentially new services, new product offerings, go after new customer segments and market segments as well. So this is potential big change for you. Does it mean you're going to move headquarters? You're going to move into swanky new offices, or?
Well, we've just renovated our head office, so absolutely not. And no. But in all seriousness, no, we've got HQ here in Gibraltar. It's where the people are and the expertise sits, and also a really kind of key office in Malta. So we don't expect those kind of operational changes, certainly not in the short to medium term. But of course, it's natural that we would expect to see much closer alignment between what we do operationally, what Marqeta does over the foreseeable future. So maybe not operationally, but in terms of what we can do, we're really looking forward to being able to, in particular, leverage that technological capability that Marqeta bring into the table, which I think has been, in all honesty, possibly lacking in our business previously, and is going to become even more important when we start to develop, wallet services and other non-card services that will become increasingly important to our business model.
Thank you. Theodora and Bruno, I'm seeing a bit of a connection between these first three stories with sort of Stripe and Brex and Marqeta partnering, acquiring licenses, trying to become more cross-border, trying to serve customers in more markets around the world. Theodora, am I seeing a pattern that isn't there, or do you think there actually is a sort of fundamental trend here that businesses are just seeking to serve more customers in more markets?
I think it's natural extension, isn't it? Because payments without borders, that's what we often look at. You crack your local market and then you expand abroad. So I think it's a good natural extension of where we need to be. I think the more interesting, and I might be a little bit biased, but the more interesting stories that I find often come out from areas or economies that have less of a legacy structure, right? That things that have less in abundance. And, earlier you talked about PIX and we talked about South America, we talked about Asia. A lot of these markets is where we see a lot more extension of systems beyond the physical border. And I think that's where the story for the next 5-10 years is going to grow.
Do you agree with that, Bruno? What do you think?
Definitely, yeah, and it's interesting. And first of all, congrats, Aaron, for the deal and everything. So, but I think it's basically the quote on think globally and act locally, and we need to really have the regulatory aspect covered. You need the local expertise covered. So that's what enables like the things that we just saw in the terms of agreement of Stripe with EBANX. In the case of the M&A transaction here for TransActPay, I think those whole abstractions that we still have when you're looking on expanding globally, it need to be covered. It's a very important point, and in terms of the level of expertise and of the partners involved. So to look for for Stripe to look for companies like EBANX, which have been proven, an exceptional company on doing that. And the same thing here for these M&A transactions on Marqeta, really looking at a local partner that can deliver that. So it's important. I think that things are turning global fast, and that's the search, I think, in that which is common in the cases that we just discussed here.
It's interesting to me that a number of these are sort of American firms acquiring European businesses, and obviously in the case of a business like yours, Aaron, TransActPay, obviously American firms seeking a partner in Europe and seeking the regulatory licenses. So to some extent, your business was always likely to be attractive to an acquirer from outside Europe because you bring assets that they couldn't otherwise get. But do we think is there a wider trend of the American firms just being able to get better funding, get higher valuations, and just having that advantage from the American capital markets that just means American businesses just are that bit better able to sort of build global businesses? I mean, that's a huge question, isn't it? Theodora, maybe you've got a view on that. I don't know if it's a completely unfair question, but do American firms have an advantage in this sort of global competition to become leading fintechs?
Why am I on the spot?
I don't know. I just thought you might have a view on it. I realize that's a horribly difficult question.
No. I think it goes back to yes and no, right? It goes back to what are you trying to do? If you are looking at, let's say, a big technology platform, right, where you need a lot of capital to stand up, and you need a lot of capital to get data for training, you need a lot of that, such as the big techs of the world, then yes, I think there's definitely an advantage to be an American company, to have access to the capital, to the data, to the resources, the talent, etc., to expand abroad. When it comes to purely a financial services play, yes and no. I'm still a big fan of localization, Bruno, to your point. I'm a big fan of companies that understand where you are locally, the needs. What Southeast Asian consumers need are very different than what consumers want in North America, right? So there is the cultural nuance. Those things, it will inhibit American firms to expand abroad. I mean, easy example, look at WhatsApp payment, right? WhatsApp has been trying to expand to Brazil, has been trying to expand to India. But at the end of the day, is the local companies that win out the consumers.
I asked too big a question, I think, but I love your answer. It was fantastic. Erin, I think this is a super exciting deal for you, and I look forward to great things from you and your team, enabling all sorts of companies across Europe to create better financial products for their customers. So congratulations to you again. So now we're going to move to a story that's maybe closer to Theodora's heart, to your point about financial inclusion and markets that we don't look at so often. So our next story is from Cambodia, where WingBank has issued a 2-in-1 combined debit and credit card. The card, which is Cambodia's first of its kind, is fully managed through the WingBank app, where customers can set payment terms, view statements, reset PINs, and manage both credit and debit functions. The WingBank MasterCard One card is available in platinum and gold versions, offering elevated benefits and different credit limits depending on the tier level. It features a numberless design, enhancing security by omitting the printed card details and relying on tokenization to reduce the risk of fraud. The innovation supports financial inclusion and digital transformation in Cambodia, aligning with WingBank and MasterCard's shared mission to deliver more flexible, secure, and inclusive financial solutions. So Theodora, I would like to come to you first because, we've been talking about some of these markets. I look at this and I think, well, that's very interesting, but is a 2-in-1 combined debit and credit card the thing that Cambodian customers need most?
Let's go back to, do they actually need credit and debit card? Is that the right market for it? WingBank has been there for a long time, so I am sure they know there's a particular market that they are targeting that will need that. Now, with that being said, we talked about financial inclusion, right, in Brazil, and same in Cambodia. The stat looks dismal. Trying to find the right word for it, because it's only a little bit over 30-something% of Cambodians aged 15 and above have a bank account. So it means there is a huge untapped opportunity, but there is nuance in that data. For example, if we look back at 2017, that was an older version of the global fintech database that was published. The unbanked and the underbanked, that was even worse. The percentage was less than 18%. So less than 18% of adults at that time in 2017 have access to a formal bank account. Fast forward to less than 10 years, that number has doubled. So it means that something is working. And if you look at a lot of the consumers in the Southeast Asian market, a lot of them gravitate towards QR code payments because it's easy. You scan and you pay. That success story has been rinsed and repeated many, many times in the last, 15 plus years. And so I think that's where we can continue to see progress, not so much so because it's a credit debit card. It's the ease of use, is how you're reaching people who don't have access. So Cambodia, for example, if you look at that, there's a huge rural and urban gap. It's over 30% of the people. So the question goes back to, how can we reach the people in the rural areas that don't have access to banking services? Mobile is a great way to do that. So you need to increase mobile penetration. And it goes back to, we often say there's no true financial inclusion without digital inclusion. So you need to get the mobile infrastructure in there. You need to get the access in there. You need to have affordable technology for people to get access. And then you can continue to improve the numbers. And it doesn't really have much to do with whether or not it's a credit debit versus a e-wallet. I think e-wallet is something that has worked really, really well for many in that region. Just my 2 cents.
Love it. Love it. What do you think, Bruno?
Completely agree with Theodora. I think it's in the like I think the last decade we saw a lot of fin and fintech approaches on trying to to get to the last mile and really make inclusion happen in certain countries, and it's the same at Cambodia. Is the same we saw in some countries in Africa, Latin America is also happened. I think we have some particular cultural aspects and nuances, but it comes down to we have like digital access. Is it available digital infrastructure? I think which is important, and all the details on how that converts in terms of usability of interfaces and things like that. I think that's another story. I think that we still have like other aspects to consider, but I think we're doing well. Just like the numbers that Theodora just mentioned, I think it shows that we're moving to the right direction here.
Aaron, I'd love your view on the sort of technical side of this. So it's a numberless card. So instead of having the sort of numbers embossed on the front of the card, they're not there. They're going to try and use tokenization, or they are using tokenization. Do you think we're going to see more and more of that in card markets? I mean, I sometimes almost wonder whether the card itself eventually just disappears. What do you think about what MasterCard and WingBank are doing here, just in terms of the proposition and the security features?
I think first I'd agree with both what Theodora and Bruno said about this feels like almost a nice to have rather than what is required to drive that inclusion. But if we think about the technology more broadly and what it's seeking to achieve, I think to me I'm not sure I'm clear on what problem it's solving. It is my first point. I can see that it's cool functionality. So in some markets that might be attractive, and it's coming. We know that we're going to see this in different regions, but I think it also brings challenges as well from a consumer protection point of view. I think that it's going to be incredibly important if you can flip between credit and debit so easily. That ease needs to apply a degree of friction. The last thing we want is vulnerable consumers spending credit that they shouldn't be spending and finding themselves suffering harm as a result of that. So I think that there is a responsibility on issuers like us to make sure that if we are going to roll out those products in collaboration with the scheme, and again, I do think they're cool, but if we're going to roll them out, I think we need to be very, very responsible in the way that we do that, because I do believe that there is this potential consumer harm inherent in this particular new technology.
Thank you. So to be fair to WingBank, I mean, we picked up on this particular thing that it's done, and we're saying maybe this isn't the most interesting and most relevant product it could have done, but we haven't looked at everything else that WingBank is doing. So I don't want to sort of criticize WingBank too much, because this may be brilliant for a subset of their customers, even if perhaps there's other opportunities to innovate as well.
Well, they are actually really interesting bank in terms of using technology. So one of the things with a lot of Southeast Asian population is, or even Asians, myself included, we like to use voice instead of typing, with the characters or trying to write with the characters. So WingBank actually has a means with their chatbot. They have trained to not just reading the languages, but also hearing and understanding, so you can interact with it with voice. So those are interesting nuances as we talk about how do we expand towards different market. What do those customers want? What do those consumers want? If you want to think about Southeast Asian market, that WingBank is a great example. Look at locals, they want to use voice notes. So here, your chatbot needs to be trained with the particular local language and attuned to that. So they are interesting. Sorry, we did pick up on the different part of the story.
Yeah. And but that's actually a really lovely example of inclusion, isn't it? It's just, making it easier for people to communicate. Yes. And of course, as a Westerner, it doesn't cross my mind that it's harder to communicate if you're using a character-based language.
Try write Chinese.
there are a number of things I know I will never be able to do in my life. That's up there.
Yeah, but it's a great example. Like my kids don't know how to write, but they can speak. So using the voice recognition, they can actually communicate.
Yeah, and I absolutely love that example. Okay, now for a quick look at one more newsworthy story this week that we don't have time to cover in full, but we think you'll find just as interesting. Which is that UK fintech unicorn GoCardless is in acquisition talks. GoCardless is reportedly in acquisition talks with Dutch payments fintech Molly currently the front runner. The deal could close as soon as next month. For the year ended 30th of June 2024, GoCardless reported a pre-tax loss of £34 million, which was a significant improvement from the £77 million loss in the previous year. The company is seeking profitability by the end of this year, 2025. While no sale price has been disclosed, the move comes amid a broader industry shift towards profitability over sky-high valuations, especially as many fintechs struggle to sustain their previous unicorn status. So this is an interesting story. GoCardless is a great company that's done some great work, really trying to drive forward things like open banking payments in the UK. Lots of great people there. However, it's tough to get to scale. It's tough to get to profitability. And as we've been talking about earlier in the podcast, there's often a huge advantage of combining companies with licenses to operate in markets like the UK with companies that have got licenses to operate in other markets in payments in order to provide wider coverage for merchants and, of course, for customers across Europe or worldwide. So it won't surprise me if there's a number of other companies that are very interested in picking up GoCardless because of its fantastic assets and people. So fingers crossed that ends up being a happy story where the GoCardless family becomes part of a wider family somewhere else. Okay, well, let's move on to our final little story, which we picked up in The Guardian in the UK, which is that the creator of the Freddo chocolate bar would apparently be rolling in his grave at its price today, according to his daughter. So Harry Melbourne, who invented the Freddo bar, which is a popular frog-shaped chocolate bar, which it was created in the 1930s. It originally cost just a penny. According to his daughter, he would be rolling in his grave at how much the bar now costs. She, Leonie Wadin, has vowed not to buy one since his passing, lamenting its diminished size and higher price. Freddo bars are now commonly priced in the UK at around 30 to 35 pence, though in some instances they've been spotted selling for as much as £1, sparking public outrage as a symbol of inflation and shrinkflation. Now, that's become a little bit of a national obsession in the UK, this concept that chocolate bars are being shrunk in size and that we're being ripped off. Bruno and Theodora, as non-Britons, are possibly slightly perplexed by what a Freddo bar is. Have you seen examples elsewhere in the world of inflation where something that people think should cost a certain price suddenly looks very, very different?
Well, I think that's the case of the US, that they have a can of beverage, I think, which costs $1, and it's just like $1 and 99 cents, I think. Well, that's inflation. It's economics. So I don't think there's much to do related to that. But they used to be a symbol of how steady sometimes we would see economies of some of those countries, just like in the US with this can, which I just forgot the name, that had these drinks for 99 cents. And, things are changing.
Yes, things are changing indeed. I think a great example that is from the US, this has been going on for quite a few months now, is the egg of prices.
Yes.
It's right. It's something basic. Everyone has eggs and we buy eggs. When I went grocery shopping last week, it's about $10 US for a dozen eggs.
$10.
Yeah,
Wow.
It used to be about 4 or 5. Now, is it inflation? Is it because of bird flu? Is it because of supply chain problems? I don't know. But when it got to the point where some of the diners in here, they are actually increasing the price for breakfast because eggs cost more. It's a very simple story, but yet, the question goes to, why are we seeing what we're seeing, and why are we not seeing it in the economic numbers that sometimes are reflected out from a certain bureau? So there are a lot of questions. But I think the interesting part of this is, and I'll give you a little tidbit. I don't know if it's something that people can relate to. I just came back from Hong Kong, and we love Japanese rice. It's stupid, but we love it because the texture is amazing, it's beautiful, it's wonderful. 2 kilogram of rice in the local store in Hong Kong cost about a fourth or maybe even a fifth of how much it would cost if you buy the exact same bag in the US. So needless to say, the question goes back to your point, is it inflation, that we are getting things 5 times more expensive in the US, or is it some other unseen force? I don't even know where I'm going there, but I think
just for the record, I just remember the name of the can is just Arizona. It's Arizona drink. Yeah, it's just 90 cents, and now they tell the threat because the price of the aluminum of the can also is something that's so there are a lot of variables here to consider when you look at this kit. Yeah, exactly.
It's tariffs. Yes, with the aluminum, it's tariffs. So yeah, exactly. And I think the story behind inflation is, how does that impact consumers' wallet, right? And how does that impact supply chain? I think that is the big story, because regardless of what we like to say, the inflation is 2%, 3%, 4%, how much eggs cost, at the end of the day is, what do consumers feel? And how does that impact their choices? And then when it comes to payment options, such as buy now, pay later, such as different means to help consumers stretch what they have in their wallet, how can we then, as financial institutions, as fintechs, provide the tools on the other hand to help them cope with the different costs, to help them have tools in their hands to better manage all the candies that we dangle in front of them?
And that's a brilliant point to end the podcast on, except that we haven't asked Aaron his opinion on the Freddo bar. So I love your point, Theodora. It's wonderful. Aaron, are you appalled by the increase in Freddo bar prices, or not bothered?
I am. I'm torn between agreeing with the incredibly serious point Theodora just made, and also the less serious point of voicing my view that I've still not recovered from space-rated crisps being increased from 10 pence many years ago. It's no, appalled is the short answer.
Well, the three of you have been an absolutely fantastic, fabulous panel. I've so enjoyed the past hour. Thank you so much for joining me on the podcast. Where can people find out a little bit more about you and your companies? Aaron, where can people find out more about you and TransActPay?
Check us out online on the socials or on our website, www.TransActPay.com.
Bruno, where can people find out more about you and about Spiralem?
Well, I'm more active at LinkedIn. So if you type like Bruno Diniz there, and if it matches my face here, so it's me. And also through Spiralem.com, which is my company, and BrunoDiniz.com as well.
And Theodora, where can people find out more about you and Unconventional Measures?
So LinkedIn, Theodora Lau, that's the easiest way, or unconventionalventures.com, or bankingonAIbook.com. I'm always online.
Wonderful. And as for me, Benjamin Ensor, you can find me on LinkedIn, or you can find out more about the work the team are doing at 11fs.com. So thank you all so much for listening to today's FinTech Insider. If you've enjoyed what you've heard, please do follow us on your favorite podcast platform of choice, and please do recommend us to your friends and colleagues. If you want to join the conversation, seek us out on social media. Just search for 11FS or FinTech Insider. Thank you all so much again, and goodbye.
11FS Pulse is where financial services comes to benchmark its customer experiences. Home to over 17,000 hand-picked user journeys from over 800 brands, Pulse showcases best-in-class UX that covers everything from onboarding and payments to investments and business banking. By using Pulse, Monzo was able to cut its product research phase by 90%, and they're not doing too bad. Want to see what all the fuss is about? Book your demo with our in-house experts today at 11fs.com/pulse.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's VANTA.com/insider.